Welcome to the January 7th, 2019 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group, and your financial weatherman. What we're going to cover today, a graphic tour of the global financial markets focused on the trading activity here in the first 3 days of 2019 and what that tells us, including the Federal Reserve, the tech wreck, and what's working. Apple accounting for a huge part of Thursday's correction, falling. Dow fell 660 points in a single day, rebounded on Friday to near break even for the year. What does it mean for the rest of 2019? Well, the Stock Traders Almanac says as January goes, so goes the rest of the year. We got 2 more trading days left in that measure, so we'll cover the net results next week and what it may mean. Earnings reports are coming up. That's a significant factor, but let's cover this past year. We had the winter storm in early 2018. That took the Dow close to below 24,000. This storm took it below 22,000. Could the Dow be range bound? That was our hypothesis early in the year. Apple and Facebook. Apple's down 40% from its peak after this week's correction. They said slowing sales. Their growth went from about 30% in 2018 to about 8%. This is the key on technology. How do you price slowing growth? And it's not good news with Facebook and Apple down 40% from their peaks. The question for Apple investors, well, where else do you go? In this slide that we've seen, the technology sector is clearly broken, at least temporarily. January earnings reports are going to be important, so we'll cover them right here. What was up in the first 3 trading days of the year? Well, gains on global high-yield bond funds and energy infrastructure totaled near 5% in 3 days, an incredible rebound from tax loss selling. One reason is the Federal Reserve. High cash flow investments and a rotation into high cash flow investments are the diagnosis in the first 3 trading days. What we're going to cover here is the Federal Reserve. This is the T-bill yield, which follows the Fed-dictated short-term lending rate between banks. And here we've got the 10-year Treasury, 2.63% at the low this week, with the T-bill at 2.41. That means that the yield curve was close to inverting. What is the result, and what's the Fed likely to do in 2019? Remember, they put tremendous pressure, selling pressure, on bonds and high cash flow assets, high dividend companies all year long. They said they could do 2 rate cuts or 2 rate increases in 2019, but reality has shifted dramatically in the face of the 2018 panic, which may in fact be over. The hike probability for 2019 and the first meeting of 2020 is now a 0. It's actually more likely that they'll cut interest rates in the January 2020 meeting. This is from Bloomberg, and it proves to be reasonably accurate for what the Federal Reserve is going to do, because bankers like to talk. The probability of 2 increases in 2019 has disappeared. What that means is an all clear for assets that pay significantly more than treasuries. That's why the energy infrastructure and the global bond funds did so well in the first 3 trading days. Be sure to tune in for more details at NetWorthRadio.com. Subscribe to our YouTube channel, and when there are huge market events, you're going to get an update, an alert, with breaking news and a graphic tour of the global financial markets, including guidance on where the best bargains may be. I'm Spencer McGowan, your financial weatherman. Thank you for tuning in, and be sure to subscribe and like us, please, on YouTube. We'll be back next week. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations and bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.